Well, let's get to the big story breakdown. U.S. stock futures are looking at a higher open, and we have to keep in mind that U.S. credit got a downgrade as Moody cut its rating, but it wasn't a surprise. It did reignite worries about growing deficits and political gridlock. Now, those concerns combined with a weak 20-year Treasury auction last week pushed long-term yields higher. And also last week, the House passed the, quote, big beautiful bill just before Memorial Day. 2017 tax cuts were extended with bigger child tax credits and no tax on tips or overtime until 2028. And also, as we kick off the new trading week, we have to keep in mind it's a big week for U.S. economic data as well as some earnings. So joining me this morning is Michael Reinking, Senior Market Strategist at the New York Stock Exchange. Good morning, Michael, and welcome back from the holiday weekend.
Morning, Remy, and hopefully you enjoyed the long weekend.
I did. It does mean that we're having a holiday shortened week this week with only 4 trading sessions left for the month of May, but we have been seeing plenty of volatility. So what do you make of U.S. stock futures up by at least 1% this morning?
Yeah, so I mean, what we're seeing this morning is a rebound, following what we saw, following the weakness that we had last week, and there were 2 primary drivers of that weakness, right? The move higher in longer dated, kind of sovereign yields, right? And then also kind of the tweet from President Trump on Friday talking about raising EU tariffs, right? So we had him walk that back and kind of over the weekend and extend the time frame for when that would kick in. And overnight, we saw a very, very sharp move lower in Japanese long-dated JGB bonds after the Ministry of Finance sort of suggested that they would kind of shift the issuance schedule. So that was kind of one of the big triggers, that kind of the first shot across the bow that we talked about kind of last week was kind of a pretty weak auction in Japan on Tuesday night, which preceded our weak 20-year Treasury auction last week. And so you're seeing those longer dated JGB bonds are down 15 to 25 basis points overnight. That's bleeding into the U.S. Treasury markets as well, right? So you're seeing that 30-year and break back below 5%, and 10-year pullback from kind of recent highs as well.
And Michael, as you mentioned, it's not just U.S. bonds, but it's also bonds overseas as well. So for the viewer who may have been on vacation or not paying attention, can you break this down for us?
Yeah. So I mean, all these markets are moving in tandem, right? So as you started to see kind of the move higher in Japan last week, that flowed through to kind of to U.S. markets as well. One of the points that we tried to make last week was that the 20-year Treasury is kind of this black sheep of the Treasury markets here, right? It was a much smaller auction than what we're going to see this week. So that was a $16 billion auction, less than half the size of the 2, 5, and 7 years, that we're going to see this week, right? And when you think about the benchmarks and what actually drives interest rates for kind of the real economy, for companies, for mortgages, right? Those are really kind of benchmarks, the 5-year, the 10-year, right? So that 20-year auction kind of being a little bit sloppy, kind of seemed a little bit overblown, right? And then the news, kind of from last night is definitely flowing through.
And of course, as we kick off the week, we're paying close attention to levels for the major U.S. stock averages. And when we take a step back to look at the S&P 500 sectors, at least for now, year-to-date, industrials, utilities, consumer staples are up, but we're looking at consumer discretionary and healthcare pulling back. So what are you paying attention to this week when it comes to the sectors, especially with earnings coming out, and also levels here?
Yeah, so I mean, as we talked about last week, right, the first kind of technical support level was that 200-day moving average for the S&P 500. We tagged that on Friday, kind of in the midst of that pullback, so right around 57.75 now. So that was kind of the first line of support. That held. There is a gap that's down about 1% from there, just below 5,700 from when we had the China, kind of the China detente. So that's kind of the next level to kind of pay attention to on the downside. Clearly we're off to a pretty strong start here this morning. Look, I think the key for markets this week is going to really kind of come from the technology sector, right? We have NVIDIA earnings on Wednesday night, right? That's kind of the big gorilla in the room. So that will kind of clearly get a lot of attention. There's also Salesforce, Dell, Marvell, right? So there's a kind of your late cycle kind of tech earnings are going to really drive kind of much of the activity this week. And then we do have kind of Costco later in the week to give us a little bit of a kind of a read on where the consumer is after the open today. Consumer confidence number, right, will also kind of going to give us a little bit of a peek into kind of that consumer, kind of where the consumer sits. We've seen that survey data be really, really negative recently, so hopefully we can start to see some improvement now that we've kind of walked back from the tariff tantrums of early April.
And as you mentioned, Michael, we do have that consumer confidence figure coming out at 10 a.m. Eastern, and of course, NVIDIA after the close tomorrow, so a lot to look forward to for now. So thank you so much, Michael, for joining me.
Thanks for having me.